Hey, welcome back. This is April 5th, 2023 at 9:34 a.m. Pacific Standard Time. And today we're looking at the Wall Street Journal or US30. Excuse me. Um, all right, so we're looking at it on the monthly. And the first thing I want to call out is the relationship between this high over here and this low over here. Okay. Okay. The next area that I want to call out is, or the next thing I want to call out, let's zoom in here a little bit more. Okay. So I want to see how price has broke above, come up, come back to retest this area. And we got a strong bullish rejection from, the low or the mid 28,000, 28.7. Then we have a retracement, to come in here into this point, a low of 31,000, $385.60. So for me, this is a bullish breakout. This is a retest. And this is also an hammer pattern. So I like to say we can expect price to continue to rise on the US30. Dropping down to the weekly, I do see, let's see. I see a cute little inverted head and shoulders pattern here. We have another major reversal area, which I'm just going to highlight in white. Make sure everything's locked up tight. Okay. So we can see how price kind of just comes and touches and touches and touches and touches on this point. But we've been here for some time. So this is a major consolidation period. With the uncertainty in the market, it's not unrealistic to say that we could break above and potentially come back down and hang around. I'm not getting any super strong bullish momentum. However, I do see that, we have a clean respect here at this level, and we move pretty far away up, and we're here again, magnetized on this zone. I do have the bullish indicators that I expect to see, like the crossover of the MAs, strong bullish, candles, as I mentioned, the retracement, and then strong bullish momentum upward. But we've been here for a while. So I'd like to just to see how price really comes in and plays in this zone. And then we have the next zone to look at, which I'd say is like right here. And the next zone to look at here. And it'll be key just to really see what happens with price in these areas. Are we going to get like a cream break above? Is it going to be a lot of extreme bullish momentum? We'll have to see how that plays out in relation to other economic news, things that have been happening in the economy. Yeah, so I'd like to see how price comes back up above. 'Cause it seems like we're, here at the bottom of a long-term zone from this previous period in time here, this like quarters, 2 quarters, or 1 quarter, or a year, excuse me. Okay. From May 2021 to 2022, and we'll see how price likes to get back up here. Got 1, 2, 3, 4. So this will be the 5th touch, and it's been here for a while. So it's all the uncertainty in the world and in the global financial markets will continue to shed light on the situation. This week we do have NFP. Let's just refresh this page. So currently, ADP non-farm employment change is the estimated change in the number of employed people during the previous month, excluding the farming industry and government. So the previous number of employment change in jobs was 261, and this morning the news released that it was 145K. So this is you see it added fewer jobs than forecasted. So the expectation was to increase 208K, and in actuality, it was 45. So about a 60K difference. Okay, so not only that, we also had the release for the Institute for Supply Management, which talks about the manufacturing orders that is a lead indicator of economic health. So it's the most current and relevant insight into the company's view of the economy. And we've had losses in that arena too for the US dollar. So the forecast was 55.1, or I'm sorry, the previous number was 55.1. The forecast was 54.3, and it actually was 51.2. So it was a lot less than this. This is a lot less than this, but this is what was expected. So these percentage points might, sound like a small thing, but in the grand scheme of like the global financial market, every percentage counts, even like a tenth of a percentage or a tenth. And tomorrow we have unemployment claims. Canadian US dollar has the unemployment rate. Now, for the unemployment rate or the unemployment claims rate, I do want to call out that the claims are different than the rate. Claims are people that are eligible and like applying for unemployment through the Unemployment Security Department, and the rate is a percentage that they speculate of people that are unemployed. So we've had, massive amount of layoffs in the news lately from a fundamental standpoint. Let's see, let's just look at like, let's look at layoffs in 2023. Okay, so voluntary buyouts, layoffs, layoffs. I mean, I remember seeing some people like Meta laid off like 10,000 people. Amazon, earlier in the winter or in the late of winter or midwinter, it was like 10,000 people. That was really like that number, 10,000. Look, 36,000 workers. $5,000. Let's see here. Comprehensive list of tech layoffs. This is a hot topic right now. So 84,714 were laid off just this year. So they're talking about 121,000 people. 36 in February, 36.5 in February, about 37 in March, just in the tech industry alone. And it goes on and on and on and on and on. Okay, so you might be familiar that some of these names now have stocks that are associated with them, and those stocks are, have a relationship with US30. They're within there, some of them, maybe not all of them. Okay, so where were we? Okay, so looking at the chart here, we can see how all this information is ultimately going to affect not only US30, but also the DXY. And I really want to say gold too. We're going to really see some interesting price action over the next, few months, weeks, years, as our global economy is stabilizing and works on stabilizing itself. As the great thing about recessions is new opportunities for growth. That's what people say. Um, but we're going to really see, how gold breaks out above, or if it continues to move like AUD JPY. This is a cute little AUD JPY kind of thing it has going on here from that perspective. Okay. I was anticipating it coming down, but it has since broken above, retested this line and has since broken above. It's like, I don't want to stay and play here anymore. And so here it is at the 86. And so again, there's a lot of things that are happening in the global financial markets. We're going to spend a special amount of time really looking at gold at another time. But for now, gold, DXY, Ethereum USD, and US30 are some of the ones I'm really going to keep my eyes on to, and really pay attention, and look for opportunities in the market, due to increased volatility, because of the uncertainty and the various things that are happening in the market. From a trader standpoint, I mean, like, as a person, it is overwhelming to read all the news and see all the things in the news, but in calamity, we can find opportunities for gain or growth. And I know that sounds super capitalist, in a capitalistic society, um, but I like to think that trading is like in a non-dangerous way. Anyway, so just food for thought. So we'll close it out here looking at US30. Now, if you are somebody who is, or know somebody who is looking for Forex or trading mentorship, I am an active mentorship provider. I have been studying these markets for the past 7 years, and I'm really passionate about sharing this vision or purpose I have with others about learning how to trade and invest your own money in these markets, or just become well versed in these markets so you have a better understanding of what's happening in the world economy in which we all participate. Um, and sometimes we can fall victim or prey to if we're ill informed, if we don't know. So a lot of things we're going to be discussing over the next few weeks. But we're definitely going to keep looking at US30 in relation to the DXY, Ethereum USD, gold, uh, GBP, JPY. I'll talk maybe another time about the relationship between gold and GBP. If that's something you're interested in, please feel free to put it down in the comments. Let me know. I can do some analysis on that. But otherwise, I bid you adieu, and thanks for sharing this space with me.